when banks start to fail and the contraction of credit is brought in hard, where you see the fourth largest building in St. Louis, the former One AT&T Center, 44 stories tall, was sold for $205 million in 2006, just sold for $3.7 million. As that starts to hurt the banks and the banks start to collapse and rates go higher, the contraction of credit, you start to rein in credit, the whole thing collapses. So I think you will see a credit contraction that will freak people out to levels that they cannot believe. Bail-ins, Dodd-Frank law, and then ask yourself what would happen when one of these big banks collapses. It's the beginning of a daisy chain where people will run to commodities, and who will already be sitting in them comfortably? The most knowledgeable traders on the planet, the central banks who write the playbook.
In 1924, economist John Maynard Keynes famously called the gold standard a barbarous relic, dismissing gold as obsolete in both usefulness and value. Nearly a century later, that statement seems outdated, as central banks, some of the savviest investors with substantial capital, have bought more gold in the last 2 years than in the previous 50 years combined. In 2022 alone, global reserve banks purchased 1,136 tons of gold, the most since 1967 and the second highest amount since 1950. Representing a 150% increase from 2021. According to the World Gold Council, the apex banks bought another 1,037.4 metric tons last year, marking the second highest annual purchase in history. The renewed interest in gold and silver is particularly striking given that for 4 decades leading up to the global financial crisis, central banks focused on accumulating dollars and U.S. treasuries while reducing their gold holdings. This trend reversed in 2008 with a gradual increase in gold reserves, which turned into a full-fledged craze in 2022 following the financial and economic sanctions imposed on Russia by the United States and other Western countries. For instance, in 2019, central banks bought 374.1 tons of gold, a record at the time. But this was just 32% of what they purchased in 2022. With no signs of slowing down. Renowned precious metals analyst and bullion dealer Andy Schectman sees the accumulation of gold and silver by central banks as a strong indication of their relevance and a significant warning to prepare for a potential global crisis. In a recent interview with Metals and Miners, Andy highlights clear signs that central banks are bracing for a major upheaval, while other investors, mostly misled by the devious mainstream media, are focused on a collapsing economy that could very well be on its final phase. We will present clips from Andy's interview. Be sure to watch until the end so you don't miss any crucial information from one of the leading minds in the metals industry. If you haven't already, please like the video, subscribe to the channel, and turn on the notification bell for more content like this. Thanks and enjoy.
Who's the most knowledgeable investors on the planet who know the playbook? The central banks. They've been buying for 4 straight years using the suppression of the paper market that we create to support the illusion of strength of bond market and currency to de-dollarize, de-treasurize, and buy as much in the way of commodities as they possibly can. What was gold reclassified as in 2019? Oh yeah, the world's only other tier 1 asset. How'd that 60-40 split work? A year ago, it was the worst ever in its history of the 60-40 split, where, you know, stocks, 60% stocks, 40% bonds, the worst ever. And as rates continue to rise, it will get even worse. And that's, you know, you say 40 years, go back to 1982 and look at a chart of interest rates. It's a ski hole straight down. Anyone will look like a genius when you buy assets that are inversely correlated their wealth to a falling of interest rates. Rates go down, they go higher. Your house, what's your house worth at 3% mortgage versus 9 or 10%? What's your bond portfolio worth as rates fall? It's worth more and more and more. So so the real suppression in all of this has been of interest rates. It created an illusion of prosperity, turns people's homes into an ATM as the price of your home that you bought. My parents bought the home that I grew up in as a kid in Minneapolis for $75,000, sold it for almost $1 million 35 years later. And so did the house go up or did the dollar go down? And when you talk about looking like a rock star, when you buy assets, both, real estate and securities in a declining 40-year declining interest rate environment, the greatest bull market ever. Yeah. what happens just as bullish as all of these, and you talk about the stocks, look at the Russell 2000. Almost all of them are underwater. That is an indication of the broader economy, not 4 or 5 stocks, including GameStop and
Right.
Nvidia, which is a South Korean company, and Apple leading the way, and the rest are shitting the bed. I'm sorry for my language. I shouldn't say that, but doing poorly. This is a very bad, ominous situation where a handful of stocks, it's an inverted pyramid. You got a tiny little bit, a matchstick holding up the whole pyramid because there's just a handful of stocks. And what are the most knowledgeable investors doing? Using that misdirection. Look at the shiny objects over there and using it to gobble up all of the world's commodities. And so this is why so few people ever succeed in investing, because they follow the herd. But the knowledgeable investor, the big money, the ones who really get it, they understand this is a world of commodities now, not promises and debt and opaque debt instruments. So yeah, there will be, but by the time that flip happens, the biggest money in the world, the most knowledgeable who write the playbook, like for example, in 2017, when the Bundesbank and all of those Eastern European banks started repatriating their gold after 6 years of gold going down out of nowhere. And then next year, 2018, those groups bought more gold, those banks as a group, than they did in the 60 years previously combined, doubled that amount in 2019 after they all brought their gold home from the Fed and the Bank of England. And then the BIS says, oh, by the way, we've now reclassified gold as the world's only other tier 1 asset. Do you think they were told this is coming? Get your house in order, start buying gold and repatriate? Of course they were. It's a good old boys club. So they know the playbook. And when you see them using this massive amount of Western suppression where contracts are created so many times, hundreds of times over on the same ounce of gold, allowing them to manage its price rise. But that was when no one stood for delivery. Now all of these countries stand for delivery, and it's all changing. I don't think we've even begun to see anything yet as to how this all plays out, but there will be a shift. But people are too dissuaded by price and they don't look at fundamentals. But when you have a Western media that does, not only do they not do a poor job, they do no job of telling us what's happening, that there are very well-read people who just read the wrong stuff and will be run over by what they have no idea is coming. They don't see it, so they'll get run over by it, even though they are considered to be well-read.
Andy warns that a crisis is brewing in the US real estate market. He gives the example of the former AT&T office tower, which the Goldman Group purchased in April for $3.6 million. The building, one of the tallest towers in St. Louis, was sold for over $205 million in 2006, a 98.29% discount. If the real estate crisis spreads and worsens further, the entire US banking industry will be in huge trouble. And if 2008 has taught us anything, that cannot be allowed to happen. The response to another banking crisis will be more unchecked money printing, which means further devaluation of the dollar and an increased appreciation for the hardest assets of all, which are gold and silver. The world's fiat-based debt system is propped up by central banks that consistently debase all currencies and lower their value by printing recklessly every time they run into a challenge. However, that might not be possible for much longer. The United States, for example, now has a 130% debt-to-GDP ratio. Experts warn that this has been a point of no return for other countries and empires that have fallen from grace. No economy that has reached a 130% debt-to-GDP ratio has been able to get out of the problem without a nasty default. Andy believes that the collapse is much closer than everyone believes, and when it finally happens, everyone will be rushing towards safe haven assets like gold and silver. Let's get back to the interview.
I don't know how this all plays out, simply to say that I think this system starts to break, and commodities will be realized as asset classes that are far more valuable than the currencies that possess them. But I don't know how that plays out, because people have been enamored with immediate return. They're ignoring the price of gold, largely because the Western media has painted it in such a negative light. It's an archaic relic from the past. It's no longer needed. It pays no interest. The funny thing is, if you were to, in 1960, make a decision. Your parents said, look, grandpa left us 435 ounces of gold. And ironically, gold's $39 an ounce. That's the price of our house, $17,000. 435 times 39 is real close to 17,000, which was the average price of a house in 1960, according to the Census Bureau. And the decision was made not to spend the gold, to keep it because grandpa gave it to us and we're going to save it for Gary. So let's put it under the mattress, where it's been earning nothing but dust for the past, 63 years? Take out a mortgage. And so that $17,000 worth of gold, that 435 ounces, well, what's that worth today? That 435 ounces today is worth over $1 million. And that's an asset that's earned no interest. And how about the value of the house at $17,000? Well, the average price of a house now is about $400,000, according to the 2024 Census Bureau. Buys you 2.5 houses. What gold does is it keeps pace with inflation. Gold doesn't go higher. The currency that we value it against goes further down, falls with inflation every single year. When my father graduated college in 1964, he dreamed of getting a job that paid $10,000 a year. The first Corvette Stingray he bought in '73 was $6,000. Now it's $130,000. So when you talk about gold not keeping pace because it doesn't pay a return, it's a bunch of nonsense. Since 2000, it's outpaced every single asset class but Bitcoin, including the S&P, even with reinvestment of dividends. It was $252 back then. Now it's almost $2,400. You tell me. I would say that it is the realization that gold is the anchor to a system that will preserve your capital and can actually retain and accentuate your purchasing power. This is not lost on the central banks, but it is on the investing public. So I think it will take, when you realize that there's 0.5% allocation in metals from Joe and Jane Sixpack to the Harvard Endowment Fund, we're woefully underallocated to it. By the time people realize they need it, even if 5% allocation would be a tenfold increase in demand, like that, everything would be gone. It would be too late. And so most people will, by the time they realize it, will be shut out of getting anything of any utility or value. I guess that's why you see the big money, the ones who understand where we're going in a completely different direction than all the so-called expert hedge fund investors and whatnot who are investing in NVIDIA and Apple and all of these stocks that are very long in the tooth, horrible breath, where the Russell 2000, which is saying the economy sucks, but these 3 or 4 stocks, they're pushing the indices way higher because of their weighted value in the indices. It's a very bad omen. And I think when it does flip, it will freak people out to a degree that renders them shut out of a market that very quickly runs out of product. Quick.
According to the World Gold Council's 2024 Central Bank Gold Survey, central banks' renewed preference for gold is due to its crisis response, diversification benefits, and store of value attributes. This trend, coupled with Western metals suppression and Eastern accumulation, suggests a potential shift from the fiat debt-based system to a more robust commodities-backed system. Andy Schechtman believes many recent events are directly linked to this ongoing transformation. From the excessive money printing during the pandemic to the sanctions against countries like Iran and Russia, sanctions that highlight a double standard given the United States' own actions, these nations are growing weary of Western dominance. They recognize the vulnerability of the U.S. economy and, by extension, the Western world, seeing an opportunity to challenge this dominance. Andy argues that we are approaching the endgame, a tipping point marked by countries increasingly dumping U.S. treasuries and buying gold. Each time the Federal Reserve prints more money, it weakens the dollar and erodes investors' confidence. Each rise in treasury yields to attract hesitant investors brings us closer to this critical juncture. Andy's solution is to invest in gold and silver now, before these precious metals become scarce. Please share your comments and observations in the section below. If you enjoyed this video, please like it, subscribe to our channel, and turn on post notifications for more updates. Thanks for watching.